Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Let's start off with the monetary policy related update. Reserve Bank of New Zealand maintained rates at the previous levels, meaning rates are maintained at 5.5%. When it comes to data from the US, the durable goods orders was lower than forecast. This indicator measures the change in total value of new orders for long-lasting manufactured goods. It's a survey published by the US Census Board. Again, this is an indicator as to how the economy is doing, especially the demand side of the economy. Morning, JK. A lot of data from the US yesterday. Your thoughts and your take on the markets.
Good morning, Swaraj. Uh, yeah, I mean, most of the data were all second tier and not really so much influential on the monetary policy. But yes, they do give an indication as to how the economy is doing. Durable goods orders headline was definitely down. But if you strip out the defense and the aircraft orders, then you have the number which was better at 0.3% plus, and that actually shows how the core economy is doing. But on the other side, consumer confidence in the US actually came down as per the conference board reading, and to 109 from 115 last month. And so again, consumers seem to be concerned about the consistent higher prices and also the political situation. So these are the readings of the conference board, and the drop has happened after 3 months of rise in the consumer confidence. There was also a house price data. Home prices hit the all-time high of at 0.2% increase, and this is as per the seasonally adjusted Case-Shiller House Price Index. So that continues a streak of 7 consecutive record highs in 2023, and it also outpaced the average annual home price gain of over 35 years. So these are uh, second tier indicators, as I said, but market is more keen to see the overall growth of the economy in GDP tonight, expected 3.3%, and also the PCE inflation tomorrow, where the month on month is expected to go up on the headline from 0.2 to 0.3, and on the core from 0.2 to 0.4%, because the CPI, monthly CPI and PPI numbers had come much higher than expected. So the expectation on PCE numbers are also higher. So that's what the market is looking at. And in the absence of major data, market was also looking at the statements from policymakers. Yesterday, we had the one of the Fed members, Miss Bowman, who was saying that she is not actually ruling out a rate hike if the price starts to increase once again. So she says, I am willing to raise the Fed funds rate at a future meeting should the incoming data indicate that the progress on inflation has stalled or reversed. So once again, a warning to the market to not to overestimate the monetary policy change. And this is the second time I have seen a statement like this, because I think earlier Larry Summers, who was of course not in the government now, was also expressing that he won't be surprised if Fed hikes rate. So you can see that the expectation of rate cut even in June has come down to around 60% now probability. And therefore, I think a lot depends on how the coming inflation numbers turn out. On the other side, what can actually give some credence to a rate cut expectation is the consumption, which I think sooner or later going to take a hit, because while prices stay high, 3% inflation consistently holding, which means that consumers are having to pay a lot more compared to a year ago. On a month-on-month basis, they are paying higher and higher prices. So eventually, it is going to hit the consumption and the growth. So the medium-term view, eventually, Fed will have to support the economy through lower rates, while the inflation will be a headache for them if it persists for too long. So that is how it is. Even the Reserve Bank of New Zealand while holding the rate steady, they said the rate needs to remain at restrictive level for a sustained period to ensure that this occurs. And in fact, we have also seen yesterday a statement from one of the Bank of England members who was quite vocal in saying that they were not happy with the way the price pressures have remained high, and they wanted more evidence before they were easing. And he said services inflation, wage growth needed to be watched very closely. So overall, if you look at the statements from various policymakers, there is a lot of caution on inflation remaining high, and they wouldn't want market to assume rate cuts and get into a euphoric mood once again. So this is how the state of affairs on the inflation and the monetary policy looks. And in this context, tomorrow's number on PC will definitely be very important. And of course, the growth picture of US, the components of it, the consumption and also the investment, these are the numbers that I'll be looking at very closely. Talking of GDP, we'll also have the GDP number from India tomorrow, both on the Q4 2023 as well as a full year estimate for FY 23-24. Yes, on the euro side, we had a minor data from Germany, GFK consumer sentiment survey, which is very marginally improved, but there is concern continuing on German economy, which has not been performing, and the consumers are not, encouraged by the fact that economy continues to struggle and the price pressures remain. So again, the eurozone economy is not really getting the traction without the biggest largest economy in the region showing some strength. But surprisingly, on the currencies, euro actually maintained the higher level despite all these factors, which not so encouraging. But this I would put down to seasonal, or rather the month-end demand, which usually surfaces every month, and that's keeping the euro around 1.0850. But I think once the month end is over and the data from US is consumed, we will have a direction for the euro. And I won't be surprised if unless the inflation number comes weak, I won't be surprised if the euro dollar drifts back to 1.0750 or near about some. Sterling remains supported because of higher yields. Japanese yen, some strength was seen yesterday after the inflation number came higher than expected. There is an expectation that the future months inflation will show higher because of the base effect. So the consensus seems to be veering around April change in the monetary policy, basically removal of the negative interest rate policy. So that is something that will hold the interest, but still there is some time away. Before that, we will have another FOMC meeting as well. On the rupee, not much to add, because we despite the month-end settlement on the exchange and also usual month-end demand that we would see, there was enough supply to take care of all that, and the rupee remained in a very narrow range. Again, excuse found in the waiting for data from US as well as the Indian economy. Meanwhile, the asset markets in India are also pausing. The yields not breaking 7.05 on the 10-year, and the stock market in quite a bit of a range. Looking at the fact that global markets are also in a range, and some indications that larger investors are actually unloading some of the owners. Actually, some of the owners are actually unloading some of their holdings in the equities. That is something being seen. Whether it is a unwinding of large position, or it is something more that they're looking forward to as a negative development, that is something. And interestingly, Bitcoin hit a new cycle high at 57,000, and if that's something if you are following. Thank you.
Thank you, JK. And just quickly summarizing durable goods orders from the US, the headline number was down, but of course, as JK mentioned in the details, if we exclude the defense and the aviation related orders, it actually sort of improved. Even the US consumer confidence was lower as per the conference board reading. The data to watch out today would be the US GDP data, and it's forecasted at 3.3%. Now, this is the quarter-on-quarter second estimate number. Now, Fed members continue to warn the markets that and more recently, the member Bauman, who said a rate hike can't be ruled out if the headway on inflation is not made. And So the coming inflation number cannot be taken very lightly. Even GDP from India will be out tomorrow, and for rupee, despite the month-end settlements, we were in a very narrow range. I think of around I think around 1.5 paise. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.